Welcome back. Let's get into that Asian market picture now, which swung this morning, gripped by uncertainty over the China-US trade talks, with warnings that Donald Trump's unpredictability could be harming the chances of an eventual agreement. Now, trading has been volatile this week after the US president's weekend outburst against Beijing and the announcement of more tariffs on $550 billion of goods were followed on Monday by him saying the two sides had spoken by phone and negotiations would resume soon. Now, China, however, has not confirmed any calls took place, while media in the country have played down the chances of more talks or the leadership's need for a deal. The Nikkei in Tokyo managed to pick up 0.1% today, so it was an okay day as some meager gains were perhaps felt in and around the Nikkei in Japan. The Hang Seng, however, in Hong Kong not doing so well today. That going down 0.2%, pretty much a flat stance for most of the morning. The Shanghai Composite then out in China slipping 0.3%, so not necessarily a great day out there. Over into the United States last night, where U.S. stocks retreated, pulling back from the short-lived optimism of that trade war with China. That has inspired a brief rally to start the week. In the waning trading, though, of the American summer holidays, traders brushed off news that U.S. consumers remain confident about the economy, and they became a little more skeptical of President Donald Trump's repeated assertions that China wants to make a trade deal. The Dow Jones Industrial Average lost nearly all of the ground it had won on Monday, dropping 0.5% to finish at 25,777 points. The broader S&P 500 fell 0.3% to close at 2869, while the tech-heavy Nasdaq lost a similar amount, ending the day at 7,826 points. Let's unpack that market picture out in Europe then as well, and then hopefully bring it a little bit locally as well. There has been a bit of a mixed picture across the board when one takes a look at how Europe has fared over the last few days. It's actually been an opposite marks, right? With the FTSE 100 going down and the DAX headed higher. But today, things have turned around a touch. The FTSE 100 perhaps getting a slight recovery following 2 days of decline. The DAX and CAC 40 now moving in negative territory, going down a touch. It does seem that things aren't necessarily as grandiose that one would have hoped. On the local front, the market has certainly been on tenterhooks. Not much gain really coming through for the JSE All Share as well. So the local market has been hit by quite a bit of turbulence, managing, however, for now to just tick up a little bit, sitting just below that 54,000 point mark. The industrials, well, things haven't necessarily gone so well for the likes of Tencent out in Asia as well, which means that locally Naspers has certainly suffered the brunt of that, while on the financial front we are seeing a slight uptick there as the rand also continues to dwindle. The resource shares have been of course impacted pretty recently by the safe haven trading of gold, which means that the gold companies certainly headed higher. Today they continue that trend, while resources overall have certainly moved in a much better position. But the commodities themselves, that's the yellow metal gold, has certainly looked better today, still firmly above that 1500 key level of 1500, now at 15414 an ounce. 871 then for platinum, rising quite sustainably beyond the 870 mark as well earlier this morning. $60.29 a barrel for oil. A few issues around demand, but it does seem that stockpiles of U.S. crude have certainly raised over the last day or so. That's around 1% higher for U.S. crude prices, pushing up that oil price locally. It's 17 rand for a euro, while the local currency has weakened as well today. 15.33 against that U.S. dollar, having traded around 15.15 yesterday as well, with some sense of positivity. 18.71 then for a British pound. So some negativity all around when it comes to the currency. Perhaps the local bourse also not sitting in the best positive territory, but still up. Michael Traherne, Vestact Asset Management, joins us now from the Johannesburg Stock Exchange as we unpack that picture a little bit more. A sense of wait and see maybe is the case in the market. Not sure if we're headed in any particular direction right now, Michael.
Yeah, Arabile, no tweets coming out of the White House. The traders not sure what to do with themselves yesterday and today. So it's a bit calm overall. Markets busy bobbing and down around between red and green. We'll have to see what other data comes out to give us direction throughout the rest of the week.
Yeah. What about then, if we bring it locally, and I'm just going to almost shut out the rest of the world, even though they're more important. You get the statement coming out of National Treasury yesterday for that economic plan or research paper, as some have even called it. What is your your sentiment out of that? What is your thoughts of that paper? Is it going to do anything? Do you think it adds anything for the country?
Yeah, I think the first point, as your previous guest pointed out, that at least it's a shorter version of the NDP, so it makes it more practical to implement. As you were saying earlier, the implementation will be key, and it's something that national government doesn't have a great track record for. We've got brilliant thoughts that come up, brilliant strategies that we've come up with, but implementation has been light. What I did like is that part of the paper recognized where we're sitting at the moment, where our problems are, and it's only when you acknowledge what your problems are that you can then fix those problems and go forward. I know parts of the community say that it's not doing enough, but we do need to do something. Arabile, we're not even growing at 1%. So let's get through to 1%, and then strength breeds strength. We then start attracting people to the country. We start seeing increased investment. We start seeing consumers spending more, and then it's just it's a continuous cycle. So let's get the ball rolling, and then we can tweak as we go along, I think.
I'm going to take you back to the midterm budget policy statement of 2017. Malusi Gigaba delivering that one and painting a stark picture where he admitted that the country was completely in dire straits, that debt ceiling pointing imminently towards 60%. At that point, surely we had already admitted our mistakes and admitted how bad things had gone. What's different now?
Yeah, I think a lot has changed in the last 2 years. Particularly, we've seen a change in leadership. Leadership hopefully inspires further change in the country. I think we shouldn't underestimate the power of the State Capture Commission and just the government's general willingness to try root out corruption and drive things forward. Part of the problem with implementation is you need the right people to be implementing it. And corruption is one of the things that eats away at those implementations. So admitting there's a corruption problem, trying to focus on that on the sidelines will go a very long way towards implementing this. We can't kid ourselves, though. It's going to be a slow process. We're in a stage now where the economy is almost stalled, and to get things going again, it's a tough process. So one step at a time, and hopefully in the next couple of years we'll see a strong economic growth.
Yeah. What's shifting the rand to that weaker level now, 15.36 against the US dollar?
Yeah, I think that's international factors. Before, at about 12 o'clock, news came out of the UK that Boris wants to try suspend Parliament in the UK. And what that effectively means is he takes the decision out of the UK Parliament's hands and leaves it square in his hands about what they're going to do in terms of Brexit. Parliament is completely against having a hard Brexit. And by suspending Parliament, it means that he can pass through a hard Brexit without lawmakers getting in his way. That's just increased global risk levels, a bit of skittishness at the moment, and unfortunately the rand being one of the victims there.
Surely we need to find a solution, though, to Brexit, and he's saying let's come up with one. It may not be one that they like, but unfortunately this is where they stand.
Yeah, I think the big problem is the Brexit dream that was sold, 2.5, almost 3 years ago, was not something that could be plausible in reality. It looks like lawmakers are still trying to follow that pipe dream. Look, I think it's going to be tough overall. More than likely, this Brexit thing is going to be resolved by a general election coming up at some point. And effectively, the general election will be a second referendum. That's what it looks like at the moment. But one of the South African companies that have big operations in the UK, Bidcorp, this morning came out, and on the conference call they said it's too difficult to tell. You just have to see what politicians do, and from a business perspective, just carry on as usual, like nothing's happening. So I think from an investor's perspective, you just pretend it's not happening and just see what happens in the short term and ride out the waves. Yeah,
you make note of Bidcorp. Their share price up 4.2% there as well behind you. Just very quickly, what do you make of that gold price then? 1,500 seems to be that key level, right? And it's very, very significant. But does it maintain its safe haven status as long as the instability and uncertainty of this trade war with China then continues? Or will it peter out just because people will find investment opportunities elsewhere?
Yeah, I mean, gold's had a very, very strong run over the last 2 months. Trade war tensions have definitely assisted it. It's sort of slowed down now at these 1,500 level. I think it's going to take a breath and then decide which way to go. There's no doubt that trade wars, if that gets resolved, you'll probably see the gold price dropping again. But while it lasts, I think our South African gold miners are loving it. I was having a look this morning on the out of your medium, your top 100 companies, the only ones at 12-month highs are all the gold companies. So it's good to see guys making money locally, and hopefully then can stimulate a bit of employment locally. And also, don't forget, pay taxes. When they make these extra profits, they pay extra taxes, and that goes straight into the government fiscus. So, yeah, let's hope the good times roll.
We'll certainly hope so. That's all I'm waiting for, Michael. So that maybe I can join Bright Khumalo on a trip to Kenya. That's certainly a hope sometime soon. Thank you so much for the time, Michael. Appreciate it. Michael Traherne from Vestec Asset Management joining us live
on
the Johannesburg Stock Exchange. We'll bring you more business news right after the short break. Do stay tuned. This is SABC News, and you're tuned into On Point.